Good morning, dears, and welcome to Super Coaching UPSC of Textbook. Today we meet here to discuss one of the important topic of Indian economy, and that is national income. So let me tell you that what is the meaning of national income. So when we talk about the national income, let me tell you the background for that. First of all, when we talk about the national income, there is need to understand that there is two things. One is goods and other is services. What is goods? Goods are the things which are tangible and services are things which are intangible. And when we talk about the economics as per Adam Smith is the science of wealth. Economics as per the Adam Smith is the science of wealth. So, economics is the discipline which deals with the production of goods and services, because in economics nothing is more than production in terms of wealth. So we can say that economics is the discipline which deals with the production of goods and services. So when we talk about the national income, what is the national income? National income is nothing but money value of all goods and services produced in the country during a year. So we can say that national income is nothing but the wealth for a particular year. Let me simplify for you people. Suppose in Indian economy we are producing 15 goods and 8 services, and price level in the economy is general price level, or price level in the economy is 10 rupees per unit. So how much total goods and services we are producing in a year? That is 15 plus 8 equal to 23, and it is going to be multiplied by 23 is going to be multiplied by price level or the monetary value. That is nothing but going to give us the value of wealth or value of national income. So the total value of national income or wealth in a particular year is 230 as per our example. So this is nothing but the concept of national income. So when we talk about the national income can be understood with 4 terminology, that is gross domestic product, gross national product, net national product, personal income, disposable income, and per capita income. I am going to repeat once again. Personal income can be understood by calculating gross domestic product, gross national product, personal income, personal disposable income, and per capita income. Now, we will discuss all these things one by one. So, what is the meaning of GDP? Please try to understand, and I will simplify for you people. What is the meaning of GDP? GDP refers to gross domestic product, and it is value of all final goods and services produced by all sectors of economy and the citizen or the foreign sectors within a country. What is the meaning of this? That means I just want to say that suppose this is the economic territory of India. Okay, this is the economic territory of India. This is Indian economic territory, and whatever production is taking place by different industries, different households or government, whatever production is taking place within this economic territory of India, that the monetary value of all that production within the economic territory of India is known as GDP. I am going to repeat once again. Suppose this is the economic territory of India, and in this economic territory, Reliance Industry is there, Reliance Industry is there, Tata Industry is there, okay, Infosys is there, there is manufacturing industries are there, there is IBM is there, okay, let me and this all these industries are producing, then whatever is going to be the value of all the production done by all the factor of production working within the economic territory of India, be it factor of production owned by nationals or foreigners, the value of that total production is known as GDP, gross domestic product. Okay. So, in case of GDP, the focus is where the production is taking place. In case of GDP, the focus is where the production is taking place. Whether the production is taking place within the economic territory of India or not. There means the focus is not who is owning the factor of production. The ownership of factor of production may be by the Indians or may be by the foreigners, but the sole factor gross domestic, the word domestic, that means the production of goods and services is taking place within the economic territory of India, and the total monetary value of all that production which is taking place within the economic territory of India is known as GDP. Okay. Now, we will try to understand. We will try to understand GNP. What is the meaning of GNP? GNP. So, when we talk about the GNP, that means it means gross national product. So, here the focus is national. Okay. The key word here is national. So, what is the meaning of gross national product? The meaning of gross national product is the total monetary value of all the goods and services, produced by the nationals of India throughout the world in a particular financial year is known as GNP. is known as GNP. What is the meaning? That means in case of GNP, the focus is not where the production is taking place. The focus is whether the factor of production is owned by nationals or not throughout the world. Meaning, suppose this is the Indian economy and this is USA economy. This is USA economy. So, whatever production, this is Indian economy suppose, and this is USA economy. So, whatever production is taking place within this territory is known as value of GDP, and whatever production is taking place within this territory by the factor of production owned by Indians only, because within this economic territory Indians companies are also working, at the same time foreign companies are also working. Here also suppose in USA, that means in USA economy, USA company is also working, at the same time Indian companies are also working. So, in order to understand the value of GNP, what we have to do? We have to, that means whatever production is being done in Indian economy by the companies or factor of production owned by Indians, that is going to be part of GNP, plus that has to be added by whatever production has been done by the factor of production owned by Indian throughout the world, that is other nations like USA. So, whatever production is being done by Indian nationals in USA economy, that has to be added in the production which is done within the economy by the Indians in their domestic economy. Then that is going to give us the value of GNP. That is going to give us the value of GNP. Now, let me tell you with an example. So, suppose this is Indian economy, this is Indian economy, and this is USA economy. Okay, here Reliance industry is working, here Tata industry is working in Indian economy, here Infosys is working, at the same time here IBM is also working. IBM is also working. At the same time in USA economy, suppose IBM is working, suppose Reliance is working, suppose Tata is working. So, in order to get the value of, suppose whatever production is being done in Indian economy, it is 1000. The value of total production done within the economic territory of India by Reliance industry, by Tata industry, by IBM industry is 1000. And out of that 1000, suppose 900 value goods and services are produced by Indian factor of production owned by Indians, and 1000 is being done by IBM. Okay. Similarly, this is the USA economy. In USA economy, USA companies are working, suppose IBM, and at the same time Reliance is also working and Tata is also working. And the value of USA economy is suppose 1400. 1400. Okay. and out of this 1400, value of GDP of USA is 1400, and out of this 1400 GDP, the 1200 value of 1200 production is being done by USA firm, and 200 value production is being done by Indian firms. Okay. So now in order to calculate the value of Indian GNP, what we have to do? We have to exclude the production done by IBM within the economic territory of India. At the same time, we have to add the production done by Indian firms or the factor of production within the economic territory of USA. So how it is going to be? That means from 1000 we have to subtract 100 plus at the same time we have to add 200. So this is going to give us the net value of 1100. So what is going to be the value of GNP of India is, it is going to be 1100, whereas the value of GDP of India was 1000. So I think it makes sense. Now let me read it for you people. Domestic product is concerned with the given geographical territory, whereas national product can accrue in any part of the world in normal residents of the country rendering their services. Okay. Therefore, national products include net factor income from abroad, whereas gross product does not include net factor income from abroad. So this, that is, what is the net factor income from abroad? It is minus 100 plus 200. So this is nothing but, in our example, this is nothing, 100 is nothing but net factor income from abroad. 100 is nothing but net factor income from abroad. In our example, as I said, that value of GDP was 1000, whereas value of GNP was 1100 and 1100. And this 1100, okay, because the net factor income from abroad, net factor income from abroad was positive and it was 100 units. That's why the value of GNP is greater than value of GDP. Hopefully it is clear. Now we are going to proceed further, and now we are going to discuss the next concept, that is net national product. Net national product. So what is the meaning of net national product? Net national product is the market value of all final goods and services after allowing depreciation. It is also called national income at market price, when charges for depreciation are deducted from the gross national product. So let me summarize for you pupils. That means, as I said, that nothing is built in the economy, and for and wealth is produced, that means created through the production. Wealth is created through the production, and production takes place through the factor of productions, and there are four factor of production. One is land, other is labor, other is capital, and fourth one is entrepreneurship. These are the factor of production. So capital goods or capital, okay, when they are capital goods are involved in the production process. What are the capital goods? Capital goods are those goods which are used for the production of other goods, like plants, like machinery, like industries. What are the capital goods? I am going to repeat once again. Capital goods are the goods or the things which are used for the production of other goods, like it may be plant, it may be building, it may be machinery. So what happened when the capital goods involved in the production, there is natural phenomena that there is wear and tear in the capital goods in the production process. So when there is wear and tear in the capital goods, when the production is taking place, then there is need to deduct the value of wear and tear of capital goods in the production process, and this value of wear and tear in the capital goods is technically known as depreciation. So what is net national income? Net national income or NNP is nothing but total monetary value of all the goods and services produced by the nationals throughout the world after deducting the value of depreciation. And we understood that what is the meaning of depreciation. What is depreciation? Depreciation is nothing but cost of wear and tear in the capital goods when they are involved in the production process. So suppose that value of GNP is 1100 or 1000, and there is depreciation of 50 rupees value, then the NNP will be 950. The NNP value will be 950, because in order to get the value of NNP, we have to deduct the value of depreciation from GNP. Now we are going to proceed further. We already discussed depreciation describes the devaluation of fixed capital through wear and tear associated with its use in productive activities. Now we will discuss the personal income. So what is the meaning of personal income? Personal income is total money income received by individuals, that may be household, that may be industry, received by individuals and households of the country from all possible sources before direct taxes. What is the meaning of personal income? Let me make it simpler for you people. Personal income is nothing but equal to NNP at market price minus undistributed profit minus net interest payment by household minus corporate tax plus transfer payments. So this is personal income. Let me summarize it. Okay. So let me repeat once again. What is the meaning? What is personal income? Personal income is nothing but that we are going to calculate the NNP at market price. From NNP of market price, that what is the meaning of personal income? Personal income is whatever, what money the individuals are getting from all sources. So NNP at market price is nothing but national income or income of the nation, and from this income of the nation we have to calculate that what the income individuals are getting from all sources, and for that what we have to do, we have to subtract the undistributed profit, we have to subtract net indirect payments by the household, we have to subtract the corporate taxes, we have to add the transfer payments in the net national income, then we are going to get the value of personal income. Then we are going to get the value of personal income. So, what is the meaning of undistributed profit? The meaning of undistributed profit means, suppose we are taking the example of Reliance Industry. Reliance Industry, and Reliance Industry earns the 100 rupees. Okay, and this is the, suppose this is the profit of Reliance Industry, 100 rupees are the profit of Reliance Industries, and this out of 100 rupees, that means Reliance Industries save or invest, suppose 50 rupees. At the same time, Reliance Industry consume 40 rupees. But this 10 rupees, this, that means the total profit of Reliance Industries was 100 rupees. The Reliance Industry further in the next year or further production process, Reliance Industries invested 50 rupees, whereas Reliance Industries consumed 40 rupees in terms of salary, this or that. Okay, but this 10 rupees, neither they invested nor they consumed. This is 10 rupees are nothing but known to be undistributed profit. This 10 rupees are known to be undistributed profit. Similarly, what is the meaning of net interest payment? Suppose that an individual is took the car loan of 10 lakh rupees. 10 lakh rupees. Now, this 10 lakh rupees is the consumption expenditure of the individual, consumption expenditure, but on this 10 lakh rupees, the individual has to pay the interest to the banks. Suppose the total interest is going to be 2 lakh rupees. So this 2 lakh rupees is nothing but known to be net indirect taxes payment by household. Net indirect tax payment by household. That has to be subtracted from net national product. Further, the corporate tax, as I said that this is the income of individuals. So suppose Reliance Industry, we want to calculate the income of Reliance Industry. So that means on this 100 rupees, this was the profit of 100 rupee was the profit of Reliance Industry, and on this 100 rupees the Reliance Industry has to pay suppose 10 rupees tax. Okay, so this is nothing but corporate tax. So that has to be subtracted from net national product in order to get the value of personal income. Not only this, the transfer payment. Transfer payments means that individuals are getting the gifts, remittances, etc. That is known as transfer payment, and that has to be added in net national income in order to get the value of personal income. Now, we are going to proceed further. Now, we are going to discuss the personal disposable income. We are going to discuss the personal disposable income or disposable income. What is the meaning of personal disposable income? Once the individual got the personal income, we already know the personal income. We already discussed the personal income. So, we already discussed the personal income, and from this personal income, if we subtract direct tax, direct taxes paid by individual, because this is the income of the individual, and on that income the individuals are entitled to pay the taxes, that is known as personal income tax. Personal income tax. So we have to subtract the personal income tax, that is known as direct tax, minus we also have to pay subtract the penalties, fee, like penalties. Suppose you are traveling without helmet, and the traffic police personnel capture you, then you have obligation to pay the penalty in the form of channel. Similarly, if you go to the go to make driving license, then you have to pay the fee. So that means when from the personal income we are going to subtract the direct taxes and penalties, that may be in the form of license, that may be in the form of fee, etc., then we are going to get the personal disposable income. Then we are going to get the personal disposable income, and this is the income in the hands of individual which can be disposed, which can be consumed by the individuals, which can be consumed by the individual. Now, we are going to proceed further. Now, we will discuss the per capita income. We will discuss the per capita income. What is the meaning of per capita income or the average income? That means when we calculate the NNP at market price constant, that is known as national income, income of the whole nation. But now we want to calculate the average income of individuals or income of a particular person. So, for that what we have to do, we have to divide the net national product at market price with population. So, this is nothing but per capita income. So, per capita income, in order to calculate the per capita income, we have to divide the net national product with the population, and this is nothing but known to be average income in the nation. This does not give the real picture of the income of the individuals, because there can be disparity, because what happens, the income of the industrialist like Ambanis and Adanis, it is too high. At the same time, the income of the rickshaw puller is too low. So, that means in the national income, we are going to include the income of Ambanis and Adanis at the same time, and national income is going to be divided by population, and that is going to give us the average income or per capita income, average income or per capita income, which is not a real picture, because it did not give the picture of the income of the rickshaw pullers, because so this is about the per capita income. Now, we will proceed further and we will discuss the importance of national income. When we talk about the importance, it is useful for measuring the standard of living through calculating the per capita income, but does not give the real picture, because there is disparities and it gives the average picture, and it is used for measuring the comparison for year to year, comparison between two countries, and useful revealing the expenditure pattern of the country. Similarly, it is useful for label of pattern of investment, that how much, as I said that nothing is wealth other than the production, and production always takes place with the factor of production, and factor of production, capital is one of the factor of production, capital is one of the factor of production, and capital is nothing but investment. So, when the people are investing, that pupils are, or the individuals are having the income, they are going to invest, so they are going to expand, and when they are going to expand, their aggregate demand is going to increase, and when aggregate demand is going to increase, the industrialists are going to increase the aggregate supply, and which will increase our national income. So, it is useful for measuring the level of expenditure and the level pattern of investment. It is also useful for balance of payment, okay, and it is indicator or failure of national planning. Okay. So, this is about the importance of national income, and today we finish here only. Thank you very much, dears. Thanks a lot. Thanks a lot.